Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. Last week, the S&P and the Nasdaq reached fresh record highs, while the Dow Jones closed above 40,000 for the first time to lock in a fifth straight week of gains. Cooler US inflation data fueled last week's record-breaking run, bolstering hopes of Fed rate cuts before the end of this year. While there is now a lack of tier one macro data until the core PCE inflation on the 31st of May, there is still plenty to keep traders busy this week, including the Fed's meeting minutes from its meeting in May, flash PMIs, durable goods, and a roster full of Fed speakers. This Thursday morning at 7 a.m. Australian Eastern Standard Time, AI superstock Nvidia's earnings are scheduled to drop, and you can read the preview of what is expected there on our website. Let's take a look at the chart of the S&P 500 and the Nasdaq as we look to start this new week. This is the chart of the S&P cash weekly time frame. And what I want to draw your attention to this week is that after making new highs into last week, we are now up against a very important layer of resistance coming from this 48.18 high from January 2022. It also picks up the March 52.64 high. So in theory, while we didn't get that missing leg lower, and potentially you would probably say that new highs begets new highs, well, there is a small stumbling block in the way of that, and that is, of course, this weekly trend line resistance. I would need to see the S&P cash break above here to give it the green light that we are pushing up towards 5,500. With so much event risk this week, it is a very important level. Equally, if we were to reject this level, then potentially we could find our way back down towards this 49.53 area here, potentially to 5,000-ish. Looking at the Nasdaq, there's a similar area of resistance coming in, but this time it's from the November 2021 high, this 16,764 high. And as you can see, it picks up the March 18,464 high, which is this bar here. And as of Friday night, it closed below there. Drilling down onto the daily time frames, if you recall, we were looking for another leg lower as part of this correction, which started in April. Now, of course, that hasn't played out. That cooler inflation data did see that final kick higher. But when you look at where the Nasdaq got to, it also respected this weekly trendline resistance. Going back to that weekly chart, here it is again. So I would need to see the Nasdaq close above there on a weekly time frame to give it the green light to push up towards 19,000. Again, a lot of event risk this week. And if we were to fail to close above here, there is a chance that we can trade lower. I would be looking for signs of a breakdown through this level, which we used back, if you recall in previous videos, we highlighted this flattening out during March and April. For about 7 or 8 weeks, it just flattened out, traded between 17,750 and, of course, this 18,400 level. And when it did break below there, this 18,750 level, this is what happened. So I think, once again, given the market's memory around this level, we'll use this 18,750 level. Again, if the Nasdaq is to retrace up here and break below 17,750, I think you've probably got a good chance that we've got another leg lower. So in a nutshell, a lot riding on these weekly trendline resistance levels, which we've just highlighted, and plenty of opportunity to trade around these levels. Have a good week ahead.